This might be your very first TradeFinder Live. Welcome. And this is not how things normally start out. We're usually on time. But anytime we do a webinar, we have to show this disclosure disclaimer. It's a requirement. And please take a screenshot of it, read it in detail at your leisure if this is the first time that you're seeing any of our webinars. A couple things that the powers that be want us to make sure you're aware of is, number one, we're not registered to give individual investment advice in the United States. And two, because we have a lot of international viewers, we have a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So from that, the rest of it, again, take a screenshot of it, have it at your disposal, and read it when you can. So tonight, this is TradeFinder, and so I will do a brief market update. Then we'll go through and talk about any close alerts that we've had for our subscribers. Kind of want to talk to you about one that's interesting, a little twist to it that occurred after hours today. Then we'll look at our previous case studies, which we don't have that many left because we closed so many of them out. We'll go through and look to see if we can find a new case study consideration for tonight. And then with that, we'll take questions at the end. And well, maybe there'll be a lot, maybe there won't be any. Who knows? With the way things have gotten off to a start tonight, we'll wait and see. All right, but let's take a look at where the market is right now. And so with the market, you can see what I wanted to show you is two dojis in a row. So back-to-back dojis, little tiny bars. So the first thing that we want to do is we want to look at our moving averages. You can see that we are well above the 10-day moving average. So that part's good. We had some volatile days, big intraday bars there, and then two small bars back-to-back. So two tiny doji bars. You can see the last time we had one back on the 16th. Then we had a couple down days. So are we going to do that again? Is something about to happen? But having back-to-back small intraday volatility dojis is certainly a concern. So then you want to see, well, what does the volume look like? And you can see that with both those dojis, we had very low volume. So a lot of uncertainty. That's what we know that means. The rest of it, we'll have to wait and see tomorrow. Do we get a big move to the upside? Do we get a big move to the downside? But we're likely going to have something occur tomorrow when we go back-to-back like that on very low volume. So the market is unsure at this point in time, and so we want to respect that. And that's why we still have the puts. We still have the SQQs. All those things are still in place. And when you look at the market, it feels like we've been going up, but then when you look at it, we really haven't taken out the high from the 16th yet. So here we are on the 27th, and we're still fooling around with the same high that we had back on the 16th, and we've got some uncertainty. So my expectation is something's going to happen in tomorrow's trade. It's either going to be a pretty big up day or a pretty big down day. I don't think that we go a little bit sideways again. Noted that we still have this gap right here that hasn't been filled yet in the market. So some things to be concerned about. That's really what I wanted you to be aware of is there's we talked about in the last SPY update that there were storm clouds on the horizon. They're still there. They haven't left. And so we'll have to see what tomorrow brings in the market. But we did have Google that traded after hours. They had earnings after hours, and that is a case study that we recently closed. Trade here, and you can see that we closed that one out. So we talked about that, closing it out on the 20th last week. But what I wanted to share with you is the fact that Google moved up. And there's been a lot of conversation about this, which is what I wanted to tell you about. Been a lot of conversation about holding a position into earnings, holding a position through earnings. A lot of our subscribers ask about that. And it's always been my viewpoint that you want to trust the technical analysis, trust the Elliott wave pattern. It's kind of taking a look at the masses, etc. So we want to see that that's the pattern that's likely to occur even through an earnings report. Well, we had a butterfly that was up here with 2,500 being the midpoint for May. And so it's about right there. 2,400 being on the low end of it. So somewhere in there. That's probably closer to 26. So it would be more like here and then right about there. So that was the wings of the butterfly, looking for something to move into that area. Well, with the earnings report coming up and the fact that we already had a 50% gain, we chose to go ahead and take that position off. After hours, and of course, things can change between when the market opens and where we are right now. But Google reported earnings, the stock moved to the upside, and if things hold into tomorrow, and again, those dojis, who knows what's going to happen in tomorrow's trade, could put us right inside those wings. And so that lesson that I want to tell you about is don't get shaken out by an earnings report coming up. And you might think, well, then why did you go ahead and close it out? What normally happens is the volatility comes out. So it's a different scenario. It's not that we didn't trust the directional move. It's the fact that going into earnings, they hold the vol, especially with a stock like Google, Netflix, Tesla, all those kind of stocks. They hold the vol and the options going into the earnings report. And you may not have enough time to recover from the IV crush that occurs following the earnings report. Then that puts pressure on the fact that you have to have the stock within those wings. So the profit that we had would have been gone if we hadn't have taken it off, if the stock didn't move within those wings. Now, it looks like it may very well move within those wings. So, you know, it's a Monday morning quarterback. So what do you want to do? Do you want to take a 50% guaranteed profit right now in 9 days? Or do you want to roll the dice and see that if the earnings report's coming up and you're in expiration, you're in the near month, do you want to wait and see if the stock goes to that point? Now, I have all the faith in the world that we're going to go up and hit that price target, but that fast? So you're looking at 50% guaranteed right here. Are we going to get to our target price in the time frame? Because if the butterfly expires, then it's worthless. And you're dealing with the IV dump. So the point that I'm trying to make here, it's not the directional nature that concerns me with an earnings report. It's the volatility. It's the options. So Google, historically, over the last several quarters, hasn't moved much. They've been pretty much spot on with what they expected. A little bit of a movement here and there, but in this case, it looks like it may move. So long-winded story, and we've talked about this with our subscribers a lot. I do put faith in the Elliott wave pattern that we're going to get there. We're in a wave 3. So do we get to our wave 5 target, which that was the wave 5 target initially? That's where we came up with it. Some of our subscribers said, well, how did you hit, where did you come up with those strikes? Well, that was the initial wave 5 target. We're still in a wave 3. So we could have come down. We could have hit the wave 4 correction first, then gone up and hit that level. All kind of different scenarios could have occurred, and you're risking a nice gain in a very short period of time. So again, it's easy to come back and say, oh, gee, we should have waited. But in this point, you take your gains and you move on. And it's very difficult to be upset with a 50% gain in 9 days in a trade. So I wanted to share that with you because I'm just being real, right? That's what we try to do. We're not ducking things. We don't always show you the greatest things ever. We're real with you here and talk about trading, talk about psychology, and talk about what you need to do in order to consistently improve to the point where you're able to trade for a living. That's the goal. That's the idea. All right. So that was the thing I wanted to share with Google. So let's go back and look at AOS. Again, all this stuff was set up on my other computer, which doesn't want to connect to Zoom for some reason tonight. But luckily, the last laptop is saying we got you. So let's go back to 316, which is when we first looked at AOS. So there's where we were. That was a look. And then we started to move up. And so we moved up. And yeah, you get to the point of, was that enough of a profit? We're talking about that. We got up to a high of 68 and then a little bit higher. So now we're up to 72. Are you still in the position? So if we go back, we got in at 65. And so now you're up at 72. That's that's better than a 10% move. Are you still in? Maybe you were. So we said, if you're still in, and then as we morphed into the 13th, so let me go back a day, one day too far, you can see we had a nice little triangle there. So if you by chance were still in the position with this triangle, you might want to buy an out of the money put, protect the potential downside, because even Elliott says when you have a triangle after wave 5, that could go anywhere. It could go up or down. You have no idea which way it could go. So the triangles within the impulse patterns, he feels, are likely going to go in the direction of the impulse. But when you have a triangle in a wave 5 or following the wave 5, you can break either direction. So that's where we sit right now, still sideways. So if you didn't take the profit before, and that's the idea, right? When we're doing TradeFinder, you have to decide. You have to pick when you're going to take your profits. Whereas for our alert service subscribers, we send out alerts on when we're getting in, any adjustments that we make when we're getting out. So we give you guidance there as well on entries and exits. But with TradeFinder, you're left on your own. So that's up to you on how you would have been. Some of you may have already taken the profits and gone, but assuming that some of you may have still been following that, wanted to show you where things would have been. And so still we're in a sideways place. All right, so next we had SWK, Stanley Black & Decker. So we'll go back to the 6th. So April 6th is the date. There we go. And there was the scenario. So the target there was at 215. And there's where we are now. The high yesterday hit 211. Awfully darn close. You can see the fact that we're still in a wave 3, that wave 5 target moved. That's what happened with Google. So that original wave 5 target was at 2,500. Well, based on what occurs tomorrow, that wave 5 target is probably going to move. And we may very well go into another out of the money butterfly on Google now that we got that earnings report volatility out of the way. Set it up, let it calm down after the morning session, and then we may, just depends. You don't know where it's going to open. Things don't always follow through with what happens after hours. Tesla today being a perfect example. So there's where we are, and we go back to, we entered at 203 and we're now at 207. That's not enough of a move, so people are probably still in that one. So we'll continue to watch that. Then also on the same date, we had CNTY, which is another one, Century Casinos, that we also morphed into, and you can already see it on your screen there before I go through and reload it. So on the 6th is where we were, and there is our setup. And then as we move to the 13th, another one that went into a triangle. And so we talked about that one. Moving into a triangle as well. So same scenario. Now, different scenario, I should say. Same scenario as far as it morphed into a triangle, but different scenarios. And this is a wave 3. This is the one that Elliott says he believes this is likely to break in the direction of the impulse. So since we have a wave 3 to the upside, Elliott would say, I think this is going to move higher to the upside. My view, what we share with our subscribers from a trader standpoint, is I still think it could go either direction. And if it breaks to the upside more often than not, so be it. But if we have both sides covered and it breaks to the upside the majority of the time, let me think this through with me. If we have both sides covered, it breaks to the upside the majority of the time, but it breaks to the downside sometimes, but we have a strangle, we win every time, right? So why do we have to just pick the direction when we can cover both sides? Well, the answer to that is by covering both sides, you limit the potential gain, right? You're not going to make as much as you would if you said, okay, that's a triangle and a wave three. We're going to the upside, and you just trade it long. You'd make more money on an upside breakout from that scenario than you would out of a strangle. But then the strangle, you have the breakout either direction covered every time. So that's a personal preference scenario at that point. Now it looks like it's trying to break to the upside today. You can see here we had a doji. Here's two dojis in a row, just like the market is right now. This looked like it tried to break. Is that a breakout day? Maybe. It certainly wouldn't like to see it finish that far off of the highs, would you? I mean, it was breaking out nicely to the upside. Would have been nice if it would have closed near the high. Regardless, needs to follow through or confirmation day anyway, right? You've heard that enough times. So we need to follow through a confirmation day. We'll see if that occurs. So it's a little bit early to say that we're having an upside breakout, I think. But again, Elliott would say this is likely to go to the upside. We'll see if he's right. And we'll continue to watch that one. And then the other one that we had, TWI, Titan International, and go back. That was also on the 6th of April that we looked at that. So here we sit, the Elliott wave on, there's our pattern, and moving higher. So where were we? Back here we were at 10. And now we're at 1091. Looks like it moved further than that, doesn't it? But with the lower dollar stocks, it doesn't. The perception is a little bit greater than what the reality is, but still moving to the upside on a $10 stock. And then on the 13th, we looked at SKM. Watch this one. You're going to see it ahead of time, but I had it loaded. It would be really cool to look. That's a nice one there, isn't it? So let's go back to the 13th, and boom, there we are. We had the nice upward day on the 13th, and I remember talking about, hate that gap up to the upside, but boy, we wouldn't hate it now, right? So there's the setup, and bam, just straight vertically to the upside, a little more than the 40. So I would have liked to have seen it stay there. See how it's starting to go just a bit more vertically up? And you might think that is not a big difference. And it's really probably not from an angle percentage. I don't have a compass there to figure out exactly what angle of ascent that is in a wave three, but I do know it's gone more vertically than the 45-degree angle that I like. So that always makes me a bit nervous, but the fact that it's continued to go to the upside is a good thing. And the fact the position has a profit in it is a good thing as well. So we'll see how that plays out from here, but looking good so far. And then SAP, mentioned that one was one that I used to trade a long time ago. And so we'll go to the 13th here as well. And you can already tell that that one's made an upside move. So boom, where were we? We were at 134, and now we're at 140, $8 move. That's getting there. All right, that's getting there. 10% move would be nicer. We're consolidating a bit. Let's look at the 10-day moving average. You can see why we've gotten a little bit overbought. If we walk these legs back here to the 22nd, starting to get a little bit overbought with those two vertical moves, and then boom, boom, boom. How many times I have to talk about the 10-day moving average? You've heard it. I'm sure you're sick of hearing it, but you're going to hear it a lot more over the months and years to come. No security in any time frame gets very far away from its 10-day moving average, and this is no different. So there's two things that can occur. If you're having an upward move and you're separating from the 10-day moving average, either the stock is going to come back down to the 10-day moving average, or the stock's going to go sideways and allow the 10-day moving average to catch up. One of those two things is going to happen. That's going to happen. That is a rule that will follow. And in this case, the stock went sideways and allowed the 10-day moving average to catch up. So really good. And then last week, we struggled last week to find a case study, but we did a strangle on Cree research. So we'll just walk that back to last week. And remember talking about this down day and saying, are we going to get a confirmation day on the next day? Boy, this actually turns out to be a really good lesson on why we say that you have to have that follow through or confirmation day. So here's where we were last week, and watch what happened. No follow through, no confirmation day. Turn around, went right back up, and now it looks like maybe it's going to break to the upside. We'll see which way it ends up breaking. Elliott would have said that's going to go higher. So if you put faith in that, you didn't buy into the downward breakout last week, and we've turned and moved back to the upside. We'll see if this one actually moves up and hits that 150 target. But a really, really good example of why we always say you have to have a second day, a follow through or confirmation day on the breakouts. You can't just, this a head fake, sucks people in. Think of all the people that might have gone short here on this, because that looks like a pretty significant breakdown, didn't it? I mean, everyone can see that triangle. I'm not the only one drawing that triangle on a chart. Everyone can see it. You have a big down day. See what the volume was. Yeah, see, there was even volume on that day. So you had a big breakdown on better than average volume. Every general technician on the planet is going to look at that and say, is breaking out to the downside. So all the people that went short, at least at this point, are on the wrong side of the trade. Maybe it does turn around and end up being a downside breakout. But just reiterating why we have the rules that we have, because this kind of stuff happens. And when you've been trading for 25 years and you see these things, you make note of them and they become your trading rules. And so that's why we have to have a follow through or confirmation day. There's a lot of head fakes. Happens often. It's not a rarity that it occurs. It happens a lot. All right, so those are our case studies from the previous weeks that we had left. We closed out a bunch of them, or at least we said we're not going to look at them anymore, because if you hadn't taken profits yet by then, you're just getting greedy. So we kind of helped you along those lines with that decision. But let's take a look and see what we can find for this week. And taking a look at our, holy cow. Now I was going to bring this up, and I'm actually going to talk about this so let me do this and then come back to that. It does seem like small caps are starting to catch a bid again. So let's take a look at the IWM, which is the Russell. And you can see how it had gone sideways for a while. Now it has those two little bars too. So I think we need to qualify everything, and maybe we can find another strangle position tonight. But I think that's the most I've ever seen on the momentum scan, 12 results. So we'll take a look at those real quick. But you can see that we've gotten a pretty decent bid here out of the IWM, and that's a little bit better than what the market has had. See, the market's gone dead sideways, but the IWM has actually had an upward movement. So did the IWM, take a pause first, and now the market is doing that? And the market is going to turn and go back to the upside? We'll see. But also, take a look at this here. I'm sure some of you have seen this, where we have head and shoulders pattern here that failed. So left shoulder, head, right shoulder there, which creates the neckline down here, and we held on, right? So there's the neckline. And we've talked about head and shoulders in the past, but for those of you that might be newer and hadn't heard that, the way you do a head and shoulders pattern is you go from the neckline to the top of the head. However far that is price-wise, that's the same amount of price movement that you're looking on a break of the neckline to the downside. That's when you have a head and shoulders pattern that breaks out. Could you look at this and say, well, you know, it's at the kind of the same high, the left shoulder. Maybe we're having just a weird looking right shoulder. Maybe. If the market starts to correct and that rolls over, then you know what to look for. So if this rolls over and we come back down towards 210, then you know where to expect the downward move to go from there. It would be kind of an odd, not a more classic head and shoulders pattern if that were to happen. But I'm sure there's people that are saying, well, I'm not saying that this has failed yet because we're still at the same height as we were for the left shoulder. And it's amazing how symmetrical the head and shoulders pattern usually is, where the left shoulder and the right shoulder, they're pretty doggone close to the same price, with the head being a little bit higher on an upward head and shoulders pattern. So I wanted to show that to you because, again, it does look like there's been a bid into small caps again. And I think that's reflected by the fact that on the momentum scan, which are lower dollar stocks, there's 12 results. And that's a lot. So, man, let's look at Navi. It's been on there a lot. Just continues to just churn higher. And that's really about what it's doing. Now, this has been on the search, but this has disqualified it for us for sending out an alert because the ADX is well above the positive directional indicator. Now, the stock has continued to move higher. As I said, this has been on, that's the third time now that I've seen it show up on the search, but we can't violate the rule of having the ADX that far above the positive directional indicator. It's just a really good sign that the strongest part of the move is over, meaning that at some point we're going to start this wave 4 correction. So it's continuing to move higher, and so be it. That's the way it goes. But can't send out a bullish position on something that has that much separation between the ADX and the positive directional indicator, especially when the ADX is above the positive directional indicator. It's an odd one, isn't it? Because you look at this and say, that is weird. The fact that the ADX is not only above the positive directional indicator, it's curling up and going up, but yet the positive directional indicator is going down. Just too weird. It's just, that's not what normally happens. And you just pass on stuff like that and you look for something else. So let's go back and run through the regular ones real quick. I want to look at that CI financial there. That one's interesting. CCI looks good here. DMI doesn't look bad at all. That looks pretty good. You see the ADX curling up between the two directional indicators. That's more like what we're looking for. Boy, this doesn't move a whole lot, does it? Doesn't look like much of a momentum stock here. So we've had 3 months where we traded at 750 and then it moved up, got up to 9, it's pulled back a bit. That doesn't look very exciting. So let's move on from there. Joanne, is this Joanne Fabrics? Joan, so I don't know if it's the same company, but I don't know if they sold or if they went private and came back public again. Not sure of the story there, but it's a company that's been around forever. I don't even know if that's it, but it's not been around long enough for us, so we'll just move on. Hercules Capital. Pretty nice day today. And that was on, that's the kind of volume we want. See how it's just solid volume? It's not a big volume spike so that all the buyers have exhausted themselves, not a really low volume, so it makes you nervous about whether or not there's any sort of follow through to it. It's just good solid volume. That's what you want to see. And the DMI looks really good. The ADX is curling up. See, that's what you want. And you know that we weren't getting out of NAVI. The ADX is curling up. The positive directional indicator is above it. It's moving up. That's the pattern that you want to see for a stock to continue to move to the upside. Collapse this down a bit. See if we can figure out where that wave 5 target is there. 21. So we're trading at 17. That one looks pretty interesting. So we'll leave that one on there. And so what I want to do is that when I want to leave one on, then I'll come back and just go back to the search results, because you can just click this bottom arrow on the right here and it'll funnel right through them. So if you find them that you're not interested in, you funnel through them. I guess this was earnings or something. Some sort of news came out on rice, whatever this is, but that's not something that we'd be interested in trading. So we'll just move on from that one. New home, another really good looking DMI. You can see the ADX is only at 25. Really good separation between the two directional indicators. Again, you could look at that and say, why didn't it hold it? Because look where the high was and where we closed. So we ended up 2% on the day, but we were much higher than that at some point. Why didn't it hold it? Really not that separated from the 10-day moving average. So I don't know if you could call that overbought with where we were at the high of the day. That would be the only concern there. But the rest of that, especially the DMI, looks really good. So let's just leave that one on there. So there's NAVI. So we'll go to Duff and Phelps, midstream. I don't know what all that stuff means. So there we have a gap up there. Forget that one. The ADX was going up, but this is the one I wanted to look at, CIXX. So here we have the movement to the upside with the ADX and the positive directional indicator. The only negative here being the fact that we're getting awfully close to that 40 level on the ADX. So that's not a great thing. We want to see that ADX a bit lower than that normally for entry. So I'm a little disappointed, because this is one, when I saw it on the list, that I was interested to look at. You can see that we have a nice diagonal pattern here. If you looked on our website for our education, we went through and did an awful lot of information on diagonals. It's a great looking pattern. So boy, I guess you have to wait and see if that's going to break out. Is that a beginning or an ending? So is it a leading or an ending diagonal? It could be either one in the wave 3. So, but it's a great looking pattern. And if it breaks to the upside, it's at 15. So I don't know how much room is left. It would make sense, wouldn't it? Maybe it blows out of there. It's that wave 5 top. The ADX then is at 40, and you're kind of done. That's the end of the move. So that's a little disappointing. That's not something that we would really be interested in moving forward with, but it's worth taking a look at. Excel Entertainment. A little more room there on the DMI. Look at the separation between the two directional indicators. Look at the angle of the ADX. This is a very strong move right here. There's a lot of power behind that. Look at the volume, and nice volume day today. Again, you want good solid average volume, not the big spikes, because see what happened? The big spike, and then you come down. So you get a big volume spike, then it moves to the downside. So that's always the risk when you have a big volume spike. You want good steady volume that shows accumulation by institutions. So that's what you want for a continued move higher. So that don't look bad at all there. Problem is, not a whole lot of room left to go, right? So we're at 13, 14 is the target. Plenty of room on the DMI. So that could go higher, and that wave 5 target could move to the upside. Really like that one. And GT Biopharma hasn't been around long enough, so won't waste any time there. Same thing here with this must be a new fund that Wells Fargo started. See that ADX where that is? Same thing as with Navi. Now, if that positive directional indicator can break above that, that could get interesting. But you see the ADX is almost at 40 already anyway. So even if it was going to continue there, I don't like the fact that these financials are looking like they're done. I don't think that's a real positive for the market either. So something to keep in mind. A lot of people believe financials lead the market. That's the point I was trying to make there. So if we're seeing some financial stocks that look like they're running out of gas, that's not a real positive for the market moving forward. All right, so I think that was the end of the momentum search. Let's go back over here. Only 4. Boy, that is interesting. 12 stocks showed up on the momentum, only 4 on my bullish impulse search. Amazon's on there, so that's interesting. And let's see if there's any of those are in the wave 3. Green Brick Partners. Take all this stuff off. The ADX is curling up. Got 20. Might want to see that just another day or two. And we'll see. I also wanted to show you this. We had looked at Dollar General and said that it needed to break above 220. And I just wanted to show you, this is why resistance matters. Because last week we put that on the watch list and said if it were to break 220, well, look what happened. It didn't. So the resistance area there, that just shows you support and resistance matters. So it couldn't break above it. So it moved back down. So that was a watch list one that failed. So I wanted to share that with you too. Let's go back and look at the rest of the bullish impulse ones. Intuit. How high is this stock now? 420. You'd think this was a pretty good season for Intuit. Tax season, even though it's been extended, still is. Here we go again. Right? I didn't plan this that way, but boy, that timed out right, didn't it? Just talking about the resistance level of Dollar General, how it didn't break above it. Well, now we have the same thing here at Intuit. So 420 is the high. It's got to break above that. So we need to break above that with a follow-through day. And if the DMI continues to set up the way it is with the ADX curling up, and if these two could separate further on that breakout, that could be a nice run to 500. We're 416, so that's plenty of room. It's another one of those nice round numbers. You could certainly make a case for that. And then you look at it and you say, yeah, this is a really nice ascending triangle here. So you look at that, and this is one that Elliott says more often than not it's going to break to the upside. So we'll see if he's right. So I'm going to actually put that on a watch list. So Intuit needs to break above 420. So add that to the watch list, and you saw me writing it down. I've mentioned this in the past too. I'm very much old school. I still like to write stuff down. And I know there's a lot of you that are very computer literate and create nice spreadsheets and Excel things that you can just input them in and probably send you alerts and alarms and stuff like that. And I just still write stuff down. Let's look at Amazon. We're already long Amazon, but you can take a look and see. You can see we had a nice open and looked like maybe something was going to happen, and then it kind of fizzled out. So you look at that DMI, which looks really good, right? So the positive directional indicator, negative are separating again. The ADX is curling up. It's just above 25, so it's got a long way to go. So that looks really good. And you can see why it's struggling right here, because also at resistance, just as Dollar General was and just as Intuit was, both of them right at resistance points. So we went up, we hit it, came back down, gathered ourselves a little bit. Now we're trying another run at it. So we weren't that overbought, but just enough. We came down, traded through the 10-day moving average for a few days. Big move to the upside yesterday, and finished to the upside today, but well off of the highs. But if it breaks above this resistance area, it'll be off to the races with Amazon due to the fact that it'll be moving into clean air. We had that vertical move in the wave 5, so that came vertically back down. Get another example of why I don't like this. I don't like stuff that goes straight up. But if we can break and stay on this plane here, like that, and break through it, then Amazon could be on a really big run. So we're already long that in our subscriber service for our alert subscriber service. So I'll put that one on there. If you're interested in it, you're looking at it, you want to see it break above that resistance before putting on anything new. And then FND, Floor Decor Holdings, which obviously is playing in the housing market space. That's a pretty good looking run there. You can see we have a little bit of a triangle forming here. See what the Elliott wave pattern looks like. Wave 5 contains only a 43% extension though, so does it have room to go? Yeah, it could. Little consolidation there, so I'm not quite as concerned about the positive directional indicator moving down. Obviously would rather see it move up, but that's not so bad. The ADX moving up, and then a potential breakout there up towards the 130 level. We're at 114. You'd want to see if you didn't want to put a strangle on that. That actually could be pretty interesting. If you didn't want to, this is going to get some consideration, because based on those two dojis, I would feel more comfortable with selecting a strangle for a case study consideration rather than a long position anyway. It's not a huge mouth, right? So the high is about 118. It's not quite 10%, but it's pretty close. And what I'm doing is talking about the width of the mouth of the triangle. Usually the width of the mouth is about the breakout that you get from the triangle, and you like to see that the direction or the price level from the top to the bottom, the width of the mouth, if you will, to be 10% of the stock price currently. That's just a general guideline. That's not one of the hard, fast rules, but it's a good guideline. And so it's close. It's not quite 10%, but pretty close. But let's go back over here and let's run one more search and look at the consolidating stocks. There's 181, 317 stocks in a wave 3. Goodness. And we can narrow that down from either 181 in the consolidating or 317 in the bullish wave 3. You check both those boxes, and then we narrowed it down to what, 2, 4, 6, 8 or so. So let's see if we can't find something within here. Caterpillar, there's a few Southwest. So take a look at a few of those and see if we can't find a good triangle that we can put on as a strangle for our case study consideration for this week. So let's take a look at Caterpillar. Oh, that looked pretty good. Well, this may be a winner right off the bat. You can see the ADX diving down, and yeah. Well, that one's going to be tough to beat, especially with a doji today. So we have 20 points. Yeah. That's the 10% mouth, again, that I was calculating whether or not this was 10% stock price. So that's going to have to be one of them. It's too good to ignore. So Caterpillar as a strangle. I feel pretty good about that. Again, selecting a case study consideration that's a strangle with those two dojis, expecting that the market's probably going to go one way or the other pretty significantly here within the next trading day or two. So let's look at Cheesecake Factory. Not quite as, it's a little more sideways, so it doesn't look quite as good as Caterpillar did. You could make a case for it being a triangle there. I don't know. Caterpillar is better. So we'll just let that one go. Not that well formed. Darling Ingredients. So what would you draw this? This is interesting, isn't it? Because you could make a case for saying there's a lot of resistance there at 75, and this is an ascending triangle. But you could also say, well, we did have this high here with a doji. I prefer to view that more as symmetrical triangle. I don't think you could argue either case. Again, like when we touch the lines more often, as far as the trend lines. So I would look at that more as an ascending triangle. So I wouldn't measure it from there. I would measure it from here. So 75, it's not quite, well, 68 is close to 10%. It's close. I don't know anything about this company though. See where the ADX is. It's pretty low. Well, it's likely going to break out, so we can put that as a number 2. VAR. Hubble with the symbol hub. Too bad we can't do this one because the symbol is the same as the name of the company that creates this profit source software. So if you're wondering what the software is, if you're brand new with us, you can find out more information about it at profitsource.com. It's a program everybody always talks about. The charts are very clean. If you're a Elliott Wave option subscriber, and I mean, you've seen the results. If you've been watching these for a few weeks, you've seen the results. Why wouldn't you be if you haven't been at this point in time? But if you're an Elliott Wave option subscriber, then if you purchase Profit Source, then you get our searches as well. The hub people have been kind enough to do that, but it's a great piece of software. So don't know that there's much we can do with this. The ADX diving down in a wave 3, it's not really much of a triangle. Would have been really fun to put a position on with the symbol HUBB, but it's not going to work out. So we'll move on. Go to good old love, Southwest Airlines. You gotta love their stock symbol. Get it? I know. I'm just still a little bit tweaked from the technical difficulties earlier. So ADX is down a bit. It's a nice little triangle, but it's a little triangle. And we know that we pay attention to little triangles just as much as big ones, but I don't know if this is enough of a move. 59. It's borderline 10%. I like the fact that there's consolidation in an airline stock because it's a dichotomy with them right now, isn't it? I mean, this makes a lot of sense because, all right, the economy is opening up, people are getting out and doing things, but then oil prices went up significantly. So one of the airlines, greatest costs has gone up a lot. So they've been hit with a double whammy. They had the amazingly reduced attendance from flying. That's starting to get a little bit better. I think Delta is getting rid of cutting out the middle seats, so they're going to start selling all the seats. So those things were starting to get better. Capacity was coming back. Flyers were coming back, and then they get hit with increased oil prices. It's been pretty challenging to be running an airline over the last year or so. So the fact that we had to move up and then we have some consolidation, that makes a lot of sense to me. It's just really on the borderline of, is that enough of a triangle to generate the gains that we're looking for, which we look for 30 to 70% on the triangles. So on the breakouts, that's the idea, 30 to 70%. Well, I'm gonna go ahead and write that one down because I like the whole story around it. But understanding it's very borderline as far as the amount that it could break. So it's just Red Rock Resorts. Oh, maybe a bit too many here. close out some of these. Oh, you see that? We missed it. We're a day late. We already got the breakout. So there's the breakout day. And you could look to maybe see if there's follow through here and look at this as potentially going long. We could put that on the watch list as well. So RRR, it's good initials. So follow through day. Then you could take a look at going long that stock. If you get a follow through day and the ADX curls up. So we might have several days of this on a watch list to get that ADX up above 20. But you certainly like the direction of the two directional indicators. So if you get follow through and the ADX comes up, that could be interesting. Hate the fact that it had the gap up today. So that's always challenging. So it's just more of a curiosity watch list thing than it is really thinking about doing something. TMHC. And I mean, you could certainly draw a line there and say it's a pretty good ascending triangle versus a symmetrical one. That actually doesn't look that bad. Home builder. See where the ADX is here. It's pretty low, and it's been low for a while. It's below 10. So it looks like maybe he wants to do something. Yeah, that one's actually going to go on the list too. So I think we'll take DAR off and make this the 3. It's kind of as many as we want to do. Caterpillar for sure, Love, and TMHC. Let's just take a look at the last one just in case. And it's an ETF. It's already less interested in an ETF as far as a strangle. It's got the 2 little dojis like the market does. A bit of a pennant pattern here. It's not really a diagonal, just kind of a pennant. So, I mean, it's not a horrible looking pattern, really. You got the ADX moving up. Isn't that interesting? This is actually a good one to finish on. That's going to go on the watch list just to keep an eye on it. VOE. Because take a look at the ADX curling up. Remember that analogy that I give you as far as the volcano? You look at the volcano and it's just a big cone sitting there. But before the volcano erupts, you get all that gurgling of the lava underneath. That's what happens sometimes when you have these consolidation patterns, but the ADX turns up before you actually get the breakout. So it makes a lot of sense with the fact we have the 2 dojis here like we do with the SPY, and the ADX is breaking to the upside. So yeah, that could be a fun one to watch. I don't know if it's a big enough, it's not that bad, but we can't put them all down. So we'll stay with the 3 we have. Caterpillar, Love, and TMHC as our 3 case study considerations, and we'll keep an eye on the ones that we have on the watch list for next week. I know it's getting late because we had a late start, but happy to take a few questions. Zach, if you're there, if you have a few questions that you want to read or a few stock symbols, go ahead and go through a couple. Again, apologize for the late hour and the late start. It was all technical issues on my end.
Carry on wanted to look at SHOP and SQ.
SHOP, SHOP, Shopify. So pretty decent. Is that what, I wonder if Karen was looking at the triangle pattern, because that's a pretty good one. We certainly have to go into the high value portfolio. I like to see the ADX get just a little bit lower, but let's move that to the watch list. Because that is a good looking triangle. And then was it SQ? Was that the other one? Square?
Correct.
Consolidation there. The ADX is a little lower, starting to curl up. Not really a zigzag there. It's too far of a correction. Had a nice zigzag to the downside back over here, though. Right there. You can see the wave 4. Look at that. Right at 100%. Perfect zigzag right there. 61% B wave correction, 100% extension. Man, that was a very classic downward zigzag. The upward move here, you can probably see it already. You got to see a break above there. Got to get above 280. It turned it back a week, 13th, 2 weeks ago. It turned it back, so it needs to try again. The ADX is curling up. 2 directional indicators are setting up, but you got to get that signal yet. So the entry for a square is a break above 280. If it breaks above that, then it becomes really interesting. All right, next.
Jane said TXN triangle with low ADX, good earnings but fell.
Good old Texas Instruments. Remember the day when they dominated everything. ADX was today their earnings? Not too much of a fall. Wave 3. Definitely a good set of lower highs there. So there's the triangle. A lot of good touches on the line on the higher lows over the last week or so. Be interesting to see if it just had earnings, so it dropped the vol. That's good. If we could see that ADX maybe consolidate a little bit more, or maybe it's doing the gurgling thing. It didn't quite make it down to 15, but yeah, no, it's a pretty decent looking little triangle there. And it's got some space to it. Almost timber. You would really have to use, I know that I drew the line down here on the low, but it's tough to ignore this resistance point right here. So you kind of bump that up a little bit to resistance. And the reason I say that is because if the stock breaks to the downside, then that'll be support. So it was resistance here. And if we get a downside breakout, that 180 level will act as support. So that kind of has to factor in to the bottom of the mouth of the triangle when you're looking at, well, how wide is it? How far could it possibly move on a breakout? But it's a good looking pattern.
Thanks, Rob. Carlene would like to look at PLUG plug.
They talked about this on the financial networks the other day. The only show that I watch of the financial networks of the shows that I actually watch is Fast Money. The rest of the time, whatever network I'm on is on mute. But they talked about this on Fast Money, and their consensus was, somebody actually called in asking about it, was to stay with it. It's certainly come down to an area of support. I know we looked at this, I don't remember exactly, was it last week or 2 weeks ago? I know we looked at this recently, and I think we talked about this level needed to hold. Well, it did. Now we're at a tiny bit of resistance. This is not that major, but there's a little resistance there at 30, and you can see it turned it back from yesterday. you get a cross between the directional indicators, that would be helpful. At least you've broken back above the 10-day moving average. So for me, if this goes, if we can put this on the watch list too, if it goes above 30, then it becomes really interesting. You might have a much better DMI setup at that point in time too, and you got a lot to run. I mean, this stock came down. I was at 70 and then went down to 20 and change. But if it can break above 30, it really doesn't have a lot in the way. It could have some room to run here because going back over here, that was such a vertical move lower. So there's not going to be a lot of resistance on the way up. So it's about at the only resistance it has. So if it can break above 30 with a follow through day, that could be a good looking long. Okay, next.
All right. Pankaj would like to look at VZ, Verizon, and CCIV.
Verizon. Not a good day for Verizon today. It's in a wave 5 to the downside, but that wave 4 had a 70% correction. So for Elliott, he says that disqualifies that. So we'd be looking more at where will it stop on this downward move. So support around 55. Look at the moving averages. You're about to get a 1030 cross to the downside. So even though it's a little oversold right now, it's probably going to drift down there to 55, but it would become interesting to me at 55. That's a long-term area of support. See, we're coming back all the way to last summer where that held as support as well. So it's probably going to come down and test that 55 area. And at that point, yeah, I would see that would be pretty interesting to look long at. CCIV, was that the other one?
Correct.
Capital. Man, nobody cared about that trading it. Was that the IPO and then some institutions finally got interested in it? That's the weirdest looking thing I've ever seen there. I don't even know if that was that legit trading when it was doing that. But it threatened to break below this 20 level, which would have sent it right back down to that 10, but it held it. Nice move to the upside today. This is what you hear me talking about in times when, like, this is institutional buying, right? The stock is at $10, and then you get a vertical move up there. So institutions stepped in and bought it. Well, everybody looks at charts, it seems like these days. There's nowhere near as many fundamental analysts as there used to be. And even the ones that are heavily into fundamentals look at technicals. So we're the exact opposite, right? We're heavily into technicals, but still look at fundamentals, but more primary on the technical side. So even the most fundamental brokerage firms now look at technical. So my point is that everybody can see this. Everybody can see how important the 20 level is to hold. And what happens is when you threaten to break that, they step in and buy. And so that's what that bet that was on decent volume. Yeah, see the volume spike. So firms step in. They're trying to support that 20 level. Had a big move lower. It's got a big gap to fill here. And if they can spur the short covering, right? If they can get it to go up enough to get all the shorts to cover, then they can start a potential rally back to the upside. But point number one was we have to guard and protect. This is like, an army protecting a castle kind of thing here. The longs were protecting that 20 level, and it should be able to bounce back up towards 30 now. It looks like it should have some room to get to 30, but then it's going to have a little more trouble. If it can break 30, then it may go up and fill that gap, but it should be okay to climb just a bit more from here, especially if it were to fall back down. If somebody came in with that much volume and supported it there, they're not planning on letting go of it. They're going to continue to support it. All right, next.
There's a couple questions from Mark and Bill about Bitcoin, if you want to pull that one up.
I'll put that, I'll look at it real quick, but we're going to look at that in the market update too. And, you know, just to clarify this, it was in the last update. We talked about the upward breakout from its triangle pattern. And then people were saying that, oh, you got that wrong, didn't break to the up. Well, it did break to the upside, but it came back down. I think we were talking about this last week too. And it came down and retraced the breakout. So you set back and you start over. It held its support here at 48. See it held there, and it's trying to move back to the upside. Now the key is, are we just coming up to fill this gap, and is that it? So that's what makes this tricky, right? Or are we going to come back, fill that gap? There's going to be some resistance there at 60,000. That's going to be resistance. But if it can break above that, then we're probably off to that 72 target that we looked at before. But it needed to hold 48, and it did. Let's see where the moving averages are, and tap the 10-day moving average on the high. So it's got to break back above there. It has to break back above 60,000. Probably is going to come up and fill that gap on this move, and then we'll see what happens from there. But those are your two key levels. 48 on the low has to hold that as support. 60 is now resistance. Needs to break above that. So those two levels are key. Next.
You want one or two more, or just
we'll do two more. It's getting really late, but I know it's my fault. So
Andrew would like to look at Apple.
Hadn't changed much from last week. Still sitting here at that 135 level. We did have a pretty vertical move, so it's not surprising that following a move like that, that it's consolidating. You know, there's big tech earnings over the next few days. We had Google after hours tonight, and there's several more. So Kramer called it the most important 72 hours of the year or something like that, because so many big tech stocks are reporting earnings. But the fact that it went sideways and it consolidated this big vertical move sideways rather than moving back down was key. That was very important. If it can break above 135, then Apple takes off. It just goes on a run. The ADX is above the positive directional indicator. That's not good, but it's not surprising either, because we've gone sideways for 2 weeks. So it hasn't moved for 2 weeks. So that's kind of why we have the positive directional indicator diving down so much. But break above 135 and Apple runs. One more.
You can finish on F, Ford.
Good old Ford. It's funny how it wants to put Facebook in there. I didn't hit FB, I hit F when it's trying to auto load Facebook. That's how many people are looking at Facebook, apparently. That's nice to see Ford trying to make a move back to the upside. The wave 4 corrected at 34%, so pretty close to the 38.2%. Got a target back up there at 15 and change. And it's just nice to see Ford above 10. Anything above 10 is nice, and seemed like it stayed below 10 for decades is what it felt like. 12 is the support level. So it broke it, but it had no follow through. You can see we broke down on the 20th, but immediately reversed back up, and we recaptured the support level there at 12. So we can get that positive directional indicator to break back above the negative, get the ADX to turn back around. It looked like we were setting up. This is actually a good one to finish on, because again, this goes back to why we say, because if we went back a few days, you would say that is definitely going to happen, right? So if we walk this back a few days, and You look at that and you're like, look at that with that separation there. The ADX is definitely going to break above there, but it didn't. So it curled back down. And so now it's allowed the positive directional indicator to move higher. And maybe the ADX turns around and comes back up again on the other side, on the bullish side rather than the bearish side. If it stays above 12, that could very easily happen. Let's see what the CCI like. Yeah, CCI is just kind of getting going too. Just broke above zero there, as you can see. So there's some potential for Ford to hold this and even move higher from here. But I do want to finish off the way we started with, don't underestimate the fact that there is a lot of indecision in the market right now with these two dojis right here underneath resistance, awfully close to that 420 level that we talked about forever. So anything could happen from here. Being balanced out as far as having some long positions and some short positions is the prudent thing to do. I'm going to be very interested to talk to you again next week and see what happens from here. But again, for those of you that hung in there, thank you. Know your time is valuable. It was just a technical issue. Be working on that as soon as we get done, try to figure out what was going on. But the old trusty laptop is back up here. Thanks for your attention. Thanks for hanging in there. Have a great week. Look forward to talking to you again next week. Take care, everybody.